What does your money really mean to you? For many of our clients approaching or already in retirement, that question carries more weight than ever before, because at this stage of life, it's not just about growing or preserving wealth, it's about using it intentionally to support causes, to create impact, to leave a legacy, to align your money with your values. Hi, I'm Justin Haywood, founder of Haywood Wealth. We help retirees and pre-retirees design sustainable, tax-efficient income strategies that support their lifestyle and reflect what matters most to them. And in today's video, we're going to talk about charitable giving in retirement. Not just how to do it, but how to do it in a way that's meaningful and deeply personal. If you've ever thought about giving back, supporting a cause, or building a legacy that extends beyond your lifetime, this is a conversation worth having. And hey, before we get started, if you're interested in thoughtful, down-to-earth insights about retirement planning, go ahead and click subscribe. And if you're already giving in retirement or plan to, drop a comment below and let me know which causes matter most to you. I'd love to hear about them. So let's start with what we're seeing across the board. A 2024 study showed that nearly 80% of retirees and pre-retirees say charitable giving is an important part of their financial life. That's a big shift from the old mindset of just accumulating wealth. More and more people are asking not how much do I have, but what can this money actually do for others, for my family, for my community, or for the values that I believe in? Charitable giving is becoming the answer to that question, and not in a generic way, but in a very intentional, purposeful way. Now, one of the biggest concerns I hear when someone's thinking about giving in retirement is, can I actually afford to give without hurting my own lifestyle? And that's a fair question. The good news is, yes, you can absolutely give generously and protect your retirement plan at the same time. It all comes down to how it's structured. So let's talk through a few strategies that are especially powerful in retirement. The first is something called a qualified charitable distribution, or a QCD. If you're over age 70 and a half and you have a traditional IRA, this is one of the most tax-efficient ways to give. It allows you to give money directly from your IRA to a qualified charity up to $100,000 per year. And here's the key. It counts toward your RMD, or your required minimum distribution, but it doesn't count as taxable income. And that's a really big deal, especially if you're trying to manage your tax bracket or reduce your Medicare premiums. Because when you take a traditional RMD, that amount gets added to your income. But with a QCD, you satisfy the IRS requirement without inflating your taxable income, and the charity gets their money in both cases. We've had clients use this strategy to give $10,000 or $15,000 a year to their church or to fund a scholarship at a university that they care about. And they were able to do it in a way that kept their tax plan really clean and efficient. So if you're already taking RMDs and don't need that full amount to live on, a QCD is absolutely worth exploring. Another great strategy, especially if you have a high income year, is using what's called a donor advised fund. Think of a donor advised fund like your personal giving account. You contribute assets like cash, appreciated stock, or other investments into the fund. You get a tax deduction in the year you make the contribution, but then you can distribute those gifts to charities over time, whenever it feels right to you. This is perfect for years when you have a spike in income. Maybe you sold a business or a rental property, maybe you did a large Roth conversion, or maybe you just want to front load multiple years of giving into one tax year. We had a client a couple years back who sold a piece of land and contributed $100,000 to a donor advised fund. He got a six-figure deduction that year, avoided capital gains on the stock he used to fund it, and now he's giving to 5 or 6 different causes over time. And because the money inside the fund grows tax-free, his charitable dollars go even further. One of the things that I love most about donor advised funds is that they can become a family tool. You can involve your kids or even your grandkids in choosing which organizations to support. It becomes a teaching opportunity, not just about money, but about generosity and values. Now, let's say you want to give but still need income from those assets during your lifetime. That's where something like a charitable trust or a charitable gift annuity comes into play. Let me give you a quick overview. A charitable remainder trust, often called a CRT, is a structure where you donate assets to the trust, usually highly appreciated investments, and the trust pays you income for life or for a set number of years. Then, at the end of the term, the remainder goes to the charity you've chosen. You get an upfront tax deduction, you can spread out the capital gains over time, and you get income for life. It's a really smart way to blend giving with personal financial goals. A charitable gift annuity works similarly, but it's usually a simpler contract directly with the charity. You make the gift, they pay you a fixed income for the rest of your life, and after you pass, the rest supports their mission. These are more advanced strategies, but they can be very effective, especially for those with a philanthropic heart and a little tax complexity. Now let's shift the conversation a little. Because charitable giving in retirement isn't just about generosity, it's also about legacy. It's about who you are, what you stand for, the values that you want to pass on. And there are so many ways to make that happen. You can name a charity as a beneficiary of your IRA or life insurance policy. You could create a family scholarship in honor of a parent or grandparent. You could also make giving a part of your estate plan, or even write a mission statement to guide your family's future charitable efforts. Some of our clients even choose to hold family meetings once a year, right around Thanksgiving or Christmas, where each person picks a cause to support. It's powerful. It brings everyone together, and it leaves a lasting impression, especially on the next generation. Now, I want to take a moment to answer some of the most common questions that we hear about charitable giving in retirement. One question that we often hear is, can I really afford to give? And for most people, the answer is yes, especially when you build it into your plan and it's a part of an overall strategy. Giving doesn't have to mean sacrificing your lifestyle, it just means being intentional with your strategy. Another question that we hear is, should I give now or later? And that depends on your goals. Some people want to see the impact of their giving while they're alive. Others are more focused on legacy or reducing estate taxes. Many choose to do both, giving during life and after they passed, because they serve different purposes. And of course, another question is, what are the tax benefits? And this is where planning makes all the difference. Charitable strategies can reduce your income taxes, eliminate capital gains, and lower your taxable estate. But the key is coordination. Giving works best when it's part of your overall retirement strategy, not a separate decision. And that's where working with a fiduciary advisor really helps. At Haywood Wealth, we help you weave charitable giving into the fabric of your overall retirement plan, your tax strategy, your investments, and your legacy goals, whether that's through QCDs, donor-advised funds, charitable trusts, or even just helping you clarify what giving looks like in this season of life. We're here to help you make it meaningful. Because at the end of the day, this isn't just about writing checks. It's about writing your story. So, if you're ready to give more intentionally and want a retirement plan that reflects both your values and your lifestyle, we'd love to work with you. Head over to haywoodwealth.com and schedule your complimentary Retirement Pathfinder analysis. We'll walk through your income needs, charitable goals, tax strategy, and legacy wishes, so you can give with confidence and live with purpose. Thanks for watching. And remember, your wealth can go far, but let's make sure it goes where it matters most. Hi, my name is Justin Haywood, founder of Haywood Wealth Management. And if you're interested in learning about how we help our clients live their retirement to the fullest, visit us at haywoodwealth.com. Thank you so much.